ดีค่ะยินดีต้อนรับสู่การนำเสนอข้อมูลของบริษัท PSL Shipping จำกัดมหาชนนะคะหรือ PSL นะคะเราจะเริ่มต้นด้วยคุณคาลิดฮาชิมกรรมการผู้จัดการเราจะนำเสนอในเรื่องอัปเดตภาพรวมของอุตสาหกรรมนะคะและคุณกอตัมคูรานากรรมการการเงินในเรื่องของตัวเลขผลประกอบการไตรมาส 3นี้นะคะและถ้าท่านใดมีคำถามก็สามารถพิมพ์เข้ามาในระบบได้เลยนะคะค่ะขอเชิญคุณคาลิดค่ะ
So good afternoon, everyone. On this slide, I want you to just look at one item, which is iron ore imports. It appears that China is going to be as strong in imports of iron ore this year as they were last year. On this slide, I want you to look at the average for the last 5 years, 2019 to 2024 inclusive, and you can see what was the total amount of steel consumed in China. And then if you look at what is the expected consumption of steel in China in 2025, it is going to be approximately 1% above that number. And the same will apply for 2026. So China has not really slowed down, despite the fact that if you look at the first row, that real estate has come down in terms of consumption of steel by 25% over the 5-year average. The rest of the items have gone up quite significantly, including net exports. On this slide, I just want you to focus on the last bullet point. It shows you that all the steel being exported out of China is only being carried by our size and type of ships. And the fact is that in the first 9 months of this year, China has really done very well in terms of steel exports. If you look at the rest of the world, and on this slide, I want you to focus on the second last bullet point and now the last bullet point. On the second last bullet point, you can see clearly that overall, global steel production is projected to increase by 1% in 2025, despite the fact that China will be actually reducing steel production, and China is half the world's steel production. It means that if China slows down by about 3%, which is what is expected for steel production this year, then it means that the rest of the world will have grown by more than 4% to make up a 1% total increase in steel production. So the rest of the world is doing really well in terms of steel production, which means economies in the rest of the world are doing well. And the last bullet point, of course, to note is that India's steel production has gone up by 8.4% this year, or it's expected to go up by 8.4% this year to 162 million metric tons. If you look at Guinea and the 2 cargoes that they are expected to export in a big way, one is, of course, bauxite, and they've been doing a marvelous job on that. If you look at the first bullet point, it shows you that China is the dominant importer of exports from Guinea. And in the 9 months, China took in 118.42 million metric tons, or a 40.3% year-over-year increase. Then if you look at the last bullet point, you can see that the Simandu iron ore mine site in Guinea is now operational. And as of the 6th of November, the first train loaded with this cargo was heading towards the port to start the first cargo shipment out of Guinea. Now, the second last bullet point again tells you something quite important. And if you look at that, it tells you that the amount of time needed in Guinea to load bauxite has now peaked at 17 days. It was 11 days last year, but in 2024, but in 2025, the timing has gone up to about 17 days. If you look at the China-America truce, you can see clearly that most of the items that were going to be tariffed have now been given a free pass. And you can see clearly that China has pledged to buy a lot of cargoes from America. Now, when you see these numbers for soybean, which is the 4th last bullet point, you can see that this year itself, China will buy about 12 million metric tons of soybeans. And in the next 2 years, they will buy, or 3 years, they will buy 25 million metric tons per year. Now, keep in mind that China imports roughly 1 billion metric tons, 100 million metric tons or more of soybeans. So when they say they're going to import a lot of soybeans, it's only 25% of their import requirements that they will bring from America. The rest of the time they'll be buying from Brazil and Argentina. If you look at it in terms of tariffs and the impacts on dry bulk, you can see that China is not a big exporter. It's a big exporter of containerized goods, but not in dry bulk. If you look at the 9 months of 2025, exports of dry bulk from China was 150.8 million metric tons. That is just 3.6% of global dry bulk exports. But if you come to the three bullet points lower, you'll see in the 9 months, China imported 1.622.5 billion metric tons, or 40.7% of global dry bulk imports. The next highest importer was European Union at 8%, which is 27 countries put together, and then India was at 7%. In 2024, last year, China imported 2.3 billion metric tons, or roughly 42.2% of global dry bulk imports. So you can see that in the first 6 months' time, actually China's imports have slowed down. But having said that, you must keep in mind, China in the first quarter was very, I guess, traumatized by the tariff rates that America had put in place. But now, as the year has worn on, China has started their imports in a much bigger way. So if you look at the exports of America, that's the second last bullet point, you can see that they have exported only 1.3% of dry bulk goods to China, or 21.64 million metric tons, which is down from the year before by 41.5%. All these cargoes that America has imported from America, China has imported from America, they can buy it from anywhere else. It's just soybeans, grains, and fertilizers. All these are available from different other countries and at very reasonable prices. So obviously, if there's any tariff war, it can only hurt the US, and that is the reason why America has agreed for a 1-year truce between US and China on the tariff front. If you look at the IMO's decarbonization plan, it met fierce resistance from Trump's administration. And what did they do? They threatened any country that voted in favor of the net zero framework, that they would penalize them with tariffs, and the delegate that voted in favor would be personally penalized by getting his visas, etc., cancelled in America. So based on that, the IMO has sort of put the NZF, or the net zero framework, on ice, and they will now try to bring it back after a year. But since Trump is still going to be in power for the next 3 years, we suspect that we will not get any movement on NZF, and the only time it may start is once Trump is out of office. If you look at this slide, it tells you that total grain imports are going to grow by at least 3% in the grain export calendar year of 2025-2026. And if you look at those numbers and look at coarse grains, expected to grow by 11.2%. If you look at wheat, it's expected to grow by 5.1 million metric tons, or 2%. Soybeans is expected to grow by 4.3 million metric tons, or 2%. And soy meal is expected to grow by 1 million metric tons, or 1%. And you can see clearly which are the countries where exports are supposed to increase. Now, America is going to be increasing their exports of coarse grains, and that is mainly because China will restart purchasing from them. Similarly, if you look at wheat, the same answer is there. Canada will be the loser, and Ukraine will be the loser. In the case of coarse grains, Brazil will be the loser. In terms of soybean, America is going to grow, but not by much. Brazil will grow a lot, and Argentina will sacrifice some portion of their soybean exports. Similarly, for soy meal, USA will grow, Brazil will shrink a little bit, and Argentina will grow. This is the slide from Clarkson's showing you the percentage change in trade in billion ton miles. And you can see that for 2025, the forecast is for 1.29%. At the start of last year, in 2024, when they were forecasting for 2025, they were showing a negative growth of 0.4%. And they carried that right through till the end of last year, when they were still forecasting a 0.4% negative growth rate. And now in the middle of the year, they have come up to 1.29% for 2025. And for 2026, which was also forecast at almost zero growth, is now at 1%. If you look at minor bulks, minor bulk is expected to grow by 3.74% this year in ton mile terms and 1.97% for next year. At the same time, tonnage will grow by 4.4% in the geared sector for this year and 4% for the next year. Now, on this slide, I just want you to focus on the first and the second bullet point. The first bullet point tells you that minor bulk trade is up in volume terms by 4.7% year over year in the first 3 quarters of this year, compared to an average of 4% since 2020. But if you look at it in ton mile demand terms, it has risen by 8.1% year over year in the first 9 months, and is driven by high volume long haul trades from China, steels, and South African minor ores to China. And you can see the breakdown of the exports and the imports and how they have changed from different countries, and imports into different countries and exports from different countries. And if you look at the last point, it tells you how it is affecting ships. So if you look at the Ultramax share of growth in minor bulk rates has gone to 18.2%. So it's up from 18.2% to 23.1% for this year. Panamax is up from 9.2% to 13.1% this year in the first 9 months. And Supramaxes are down from 28.8% to 26.8% in the first 9 months. And Handysize is stable at roughly 35%. Again, this just confirms what I've just told you about the volumes of ships, volumes of cargoes that are traveling on various types of ships. And you can see that again shown over here. If you look at this slide, it shows how our ships have performed in terms of compared to the global average of ships. And you will see in steels, we are 3.3 times higher than the world average. If you look at fertilizers, we are 1.6 times higher than the world average. And if you look at wood or wood products, that is logs and plywood, we are at 2.8 times the world average. So you can see clearly that we outperform in certain areas and we underperform in others. As an example, if you look at coal, we are half the world average. If you look at this slide, it shows you in the first 9 months how the tonnage supply has changed. And you can see that the average age today is pretty old. It is one of the oldest average ages that we have seen this century. It's at 13 years old average age. And if you look at the total growth, which is the lower part of the slide and the last 2 columns, you can see that in the geared sector, we have grown by 13.36 million metric tons or deadweight tons, and gearless has grown by 11.19 million deadweight tons. If you look at the total order book, it's at 10.4% of the existing supply side as of the 1st of October. And if you compare that with the 20-year-old as of the 1st of October, it's at 10.84% versus the supply side at 10.4%. So you can see clearly that supplies, which is expected over the next 3 years, is growing at roughly the same speed as the current position of 20-year-olds. So it's good news for the forward position that for the next 3-4 years, we should not get too much of supply coming in. If you look at the BDI in the first 9 months of this year and compare it to the first 9 months of last year, the year before last, and 2022, you will see that the BDI this year is down by 17% compared to last year, is up by 31% compared to 2023. and is minus 26% compared to 2022. In the meantime, if you look at the number of ships or the deadweight tons of ships ordered in the first 9 months of this year and compare it with last year, the year before last, and 2022, what do you see? You see that the order book or the orders placed in the first 9 months of this year are 68.5% less than last year, 58.6% than less than 2023, and 43% less than 2022. And the reasons are given below. And the fourth bullet point is the one which you should focus on, that main engine availability is now a significant constraint for any future buildings that you can ask for. So therefore now shipyards, though they may have capacity to build in 28, they are only giving delivery dates in 2029 because they can't get main engines for 2028. Now, this is another factor that has come into play, the amount of time ships are spending in completing their special survey. So if you look at the third bullet point, you can see that Handysizes recorded the highest average daily number of 55 vessels undergoing special survey since the first half of 2022. If you look at the next bullet point, it gives you the number of vessels in the Supras and Ultras that were doing their special surveys, and there were 83 ships like that in that position right throughout the first 9 months of this year. And if you look at the expectation for the whole year, the geared bulkers is projected to decline by 2.3% in 2025 and 2.2% in 2026 due to special surveys. Last year, the geared bulkers experienced a 1.7% loss in supply just for this reason. If you look at this slide and look at the lowermost part, which we have highlighted for you, you can see that the ship speed in pressure shipping's fleet, which were impacted by EEXI, resulted in a 1.5 knot speed reduction. Now, if you apply that 1.5 knot speed reduction to the global world fleet of ships that were built up to and including 2011, you will see that you would lose 3.5% of the existing supply just because of speed limitations. And then you would lose 2.3% because of special surveys. So even though the expectation for this year is that you will have a 4.4% increase in the supply side, 5.8% will be lost because of these two reasons. So what are the key takeaways from what's going on in terms of the industry? The first one, of course, is that the world GDP rates have started to grow again, and IMF has started to raise its global growth rates. Secondly, China is growing as expected at around the 5% mark. Ton-mile demand is now forecast to increase to 1.3% in 2025. And of course, I've shown you a few slides which shows that Clarksons are going to be having to increase this number as time goes by, as they collect their data in a much slower fashion than other brokers. Coal exports have risen 5.6% in August for the first time since November 2024 for China, and this is mainly because of Chinese demand. Fixed asset investments in China have actually shrunk by 0.5% this year in the first 9 months, but we expect that will change with the new big dam, that the largest dam on earth, which they are going to build on the Tibetan plateau. Dry bulk fleet is forecast to grow at 3.1% total in 2025, but the net effective supply may tighten again because of the EEXI, CII regulations, as well as congestion and off-hire periods due to special surveys. So net effective supply for geared ships is estimated at 2.3% reduction in that is 2.3% due to special surveys and 3.5% due to EEXI's speed reductions. So resulting in a combined 5.8% reduction in the net fleet supply. The forward order book to fleet ratio at 10.4% as of 1st October 25 is smaller than the existing 20-year-old fleet at 10.84%. And disruptions continue. We have now the latest news saying that the Houthis will stop bombing ships in the Red Sea. And we think if they stick to their words, then that at least will now, that disruption will slowly fade away. It will take time before owners start to go via the Red Sea. So what has been our strategy in the meantime? What have we been doing with all of this information available to us? So for example, if you look at our average age, it was growing by about 1 year between 21 and 22, and between 22 and 23. And in 24 onwards, you can see that the average age sort of slowed down from growing. So instead of growing by 1 year between 23 and 24, it barely grew. And then in 2025, up to the end of September, it had also barely grown. And by the 15th of October, it had come down to 12.2 years, almost the same average age as we had in 2023. Now, so which means that we are getting younger ships into our fleet and we are getting rid of older ships. So this is the forward order book. It shows you on the bar chart at the bottom the number of days which have already been pre-booked. These will continue to rise as we continue to fix our ships out on longer and longer term contracts. And the row on the top gives you the total booked value in each year. And if you see, the total booked value for the 5 years under consideration is almost $250 million. So this chart shows you the 4 ships that we had sold up to and including the Rojarik Nari, which was delivered in the early part of this year. And in the meantime, on the right-hand side, you can see the ships that we have bought, and you can see that we have bought 5 39,000 tonners, and we bought 1 63,500 tonner, and we bought 2 66,000 tonners Ultramax ships. The 3 Ultramax ships are all about 5 years old when we bought them, and the other ships, as you can see, one was 9 years. Hansa Nari was 6 years old, and the others were all 9 years old when we bought them. In terms of speed consumptions, you can see clearly that the ships that we are buying are able to perform at a much lower consumption and give you the same speed as what we had in the older ships. Now, Gautam will take you through the financials of the company.
Thank you, Khalid. So here are the highlights for Q3. During the quarter, we reported a net profit of baht 252.39 million, or USD 7.78 million. That corresponds to 0.17 baht per share. Our EBITDA for the quarter came in at baht 692.96 million, or USD 21.36 million. We continue to pay out dividends, so we paid out interim dividend number 2 for the year 2025 in the amount of 10 satang that was paid on 5th of September. As Khalid said, we acquired 2 Ultramax bulk carriers, not really well, and actually in Q4 in October. So that the first one was on 7th of October, the second on 15th of October. In terms of financing, we increased the loan amount of a loan that we had from Trung Thai Bank in order to acquire one of the ships in October. And in terms of long-term charter contracts, we had 7 ships that were on long-term time charter rates at fixed rates, and we had 16 ships that were on long-term time charter at index-linked rates. Just in terms of our investments, so in UniAsia, as you know, we own slightly less than 6% of this company. During the quarter, we did not acquire any additional shares. And VL Enterprises, we own slightly under 22% of this company, and during the quarter, we acquired about 7 million shares. So our share repurchase program ended on 29th of August 2025, and in total, we acquired 74.59 million shares at an average cost of 6.06 per share. The total cost of 451.93 million. So here just a picture of our acquisitions and disposals. So just to add to what Khalid said, so next year we will be acquiring, or we will be taking delivery of 4 Ultramaxes. So 3 in 2026 and 1 either in the last month of 2026 or in the first quarter of 2027, which will take our total fleet size to 46. So here are the key figures for Q3 2025 compared to Q2 2025. So in terms of revenues, our revenues were up considerably compared to Q2. It came in at 44.6 million compared to 36.6 million in Q2. This is US dollars, US million. Net profit was 7.8 million, reversed a loss of 1.3 million that we had in Q2. We had a profit of 17 satang in Q3 compared to a loss of 3 satang in Q2. Return on equity was positive 1.28% compared to negative 1.46 in Q2. Our net debt to equity ratio remained fairly stable at the end of the quarter, so 0.51 compared to 0.50, and at the end of the quarter, the number of ships we had was also stable. So here we show you at the top left, we show you the time charter rate per day, the average time charter rate per day for ships in our fleet. So you'll see that Q3 was actually the best quarter from a time charter rate per day perspective compared to the last 5 quarters. And this was also reflected in the EBITDA. So we had the best EBITDA for the last 5 quarters, kind of coming in at 21 million. Bottom left shows you the dividends. So we continue to pay our dividends, and in Q3 we paid out 148 million, and our cash balance was quite healthy. At the end of Q3 we were at 49 million US. This is our statement of financial position. So at the end of the 3rd quarter, we had 658 million of vessels and equipment, book value, and shareholders' equity, quite a healthy level, 469 million. Loans and debentures, 288 million. So this is the cash movement in Q3 2025. So we began the quarter with 30 million. We generated 27 million of cash from operations. We had capex of 22 million. We had a number of ships that underwent dry dock during the quarter. Finance costs of 4 million, so this is fairly stable. We had loans of 35 million, loan repayments of 10 million, dividends of slightly under 5 million, and we ended the quarter with 49 million of cash on balance sheet. So this is gives you a picture of the loans, the loan movement during the first 9 months of the year. So we had loan drawdowns in the amount of 67 million. We had repayments of 28 million. So we began the year with 209 million and ended the quarter with 256 million of total long-term loans from banks. And in terms of undrawn loans, we had we still have 70.4 million under our IFC Kasib Exim Thailand facility. And then we had this other facility from Krung Thai Bank, which, as I mentioned, we have actually used. But this is a picture at the end of the 3rd quarter. This over here, we show you the breakdown of our operating expenses at the end of Q3 2025. And this graph over here at the bottom shows you the breakdown of operating expenses in Q2 2025. So overall, operating expenses have remained, I would say, fairly stable. No major changes except for the dry dock special service, slight increase there. Otherwise, the total figures have actually come in quite a bit below our target. So it is 5284 for the quarter, so about $400 below our target OPEX. Here's the comparison of our operating expenses compared to the industry average. So you'll see that in the latest year, where we are comparing our OPEX to the industry average, we are about $500 below the industry average. Every $100 in saving translates to about $1 million on the bottom line. So we had a number of ships that underwent dry dock, as I mentioned. So Q2 we had 11 ships, and Q3 6, Q4 we have this quarter we'll have 4. All of next year we have 11. So this year was quite an extraordinary year when it comes to dry docks. We had really a lot of ships undergoing dry dock. So here's a comparison of our OPEX and G&A to some of our listed peers in the Supramax, Ultramax sector. So this is data for Q2 2025. We don't as yet have data for Q3 2025 because these are other listed peers haven't as yet reported their results. So you'll see that our OPEX and our G&A was lower than our listed peers. And this bottom row shows you the last 12 months EBITDA per ship, and you'll see that we've actually outperformed our peers. So our revenues are higher, revenues less costs are higher than our peers on a per ship basis for the Supramax, Ultramax sector. So this over here shows you a picture of our debt maturity profile over the coming years. You'll see that we don't really have any major maturities coming up in the near term over the next few years, at least over the next 3 years. This over here shows you our net debt and net debt to equity ratio. So you'll see that the net debt to equity ratio it came to its lowest level in 2023 at 0.3, and our fleet is aging, so we need to replace the older ships with younger ships, and therefore we have to take on some amount of debt. And so therefore at the end of 9 months 2025, you saw our debt figure going up, but of course on the asset side as well, our balance sheet, our total asset base of course increased as well. Okay, so this over here shows you the average OPEX and TC rates over time. So you'll see that, so this top line, the top row over here shows you the average age of ships in our fleet from the year 2005 until today. And you'll see that from 2005 until about 2011, we had a fairly elderly fleet. Thereafter, we started to take delivery of ships that we had ordered, and the average age came down. It came to its lowest level in 2016. 5.8 years, and thereafter it started to creep up a bit. Today it is at about 12.5. The red line over here shows you the average size of ships in our fleet. So we had previously the average size of ships in our fleet was about 25,000, and then we took delivery of larger ships. We started to get into the Supramax, Ultramax sector. Now the average size of ships in our fleet is about almost about 45,000. And this dark green line shows you the average TC rate per day for ships in our fleet. So back in 2005, it was about 14,500, and from about 2005 until 2009, rates remained quite elevated on the back of China joining the WTO. And then, if you recall, there was a huge order book. The order book was about 80% of the existing fleet, and all those ships were delivered from about 2008-9 until 2015-16, and that put a lot of pressure on rates. And so you see the average rates of ships in our fleet went down, bottomed out about 2015-16. And then after that, supply-demand fundamentals have been much healthier, and so you started to see rates, average rates move up quite a bit. The line over here shows you the average operating expenses for ships in our fleet, which has remained fairly stable. It's increasing, of course, in line with inflation. So here we show you the dividends we've been paying over time. Our policy is to pay not less than 25% of net profit as dividend. And we've been paying dividends fairly consistently since 2021. There was a bit of a gap between 2015 and about 20 because of where markets were. Markets were extremely depressed at that point of time, but markets have recovered quite well since then, and we've been paying very healthy dividends over time since then. So here's a lot of data. I'm not going to go through this. This is a reference slide which you can review. Same thing, financial profile. I'm not going to read through this. Just okay, shareholder returns. So we went public in 1993. If you invested in our IPO in the year 1993 and you received all dividends, you kept holding your shares until today, you would have enjoyed a 15.6 compounded return on that initial investment. And that compares quite well to other dry bulk companies that have listed. This is a list of companies that was featured on a website called Splash 24/7. Why investing in dry bulk companies is a bad idea. So all these companies are listed in the US, dry bulk companies, many of them very famous companies. They didn't actually generate positive returns for their shareholders since IPO. All of them, without exception, lost money for their shareholders since their IPOs. This is as of August 2023. Compare that to PSL, 10,000 baht investment would have been worth about almost 1 million baht. Here's some investor relations data. Okay, let's leave that as a reference slide. Here's a bit on our ESG. So we were recognized as a climate action leader by the Asian Food Marketers Association in March this year for our leadership in climate action and sustainability. We also won the Climate Action Leading Organization Award from the TGO, Thai Government Management Organization. We received carbon neutral certification for now 3 consecutive years, 2022 to 2024, again from TGO. We've also got carbon footprint for organization certification for 3 consecutive years in recognition of our comprehensive carbon emission reporting. So we've been replacing our less fuel efficient vessels over time with eco vessels, more fuel efficient vessels, and this has resulted in the average grams per CO2 per ton mile declining from 12.884 in 2014 to about 6.03 in 2024, really. So it's more than a 50% improvement in carbon emissions per ton mile of cargo carried. And so it's not only because of eco vessels, but also the older ships that we have on our fleet. We have retrofitted several fuel-saving devices, such as Mavis ducts, pre-shotted drains, etc. We've also got new propellers on some of our ships, and all of this has resulted in pretty good emission reductions. Uniquely for a dry bulk company, we've had a environmental policy statement since 2009. This conforms to ISO 14001:2015 standards. We're a founding member of the Getting to Zero Coalition, which is an alliance to advance zero emission vessels. Last October, we were the first shipping company in Asia to issue sustainability-linked bonds. This was in the amount of about $40 million US. Under this bond, we have agreed to a target reduction in our CO2 per ton mile by 38.4% by the year 2024 compared to 2019 as the baseline year. And we were recognized for this bond and an award. We received an award for it earlier this year. In terms of our social footprint, so actually during the third quarter, we received some recognition from both the SET as well as Singapore Management University for our employee ESG education initiatives. Since 1995, we've been providing scholarships to students at the Merchant Marine Training Center. And these students, we train them, we pay for their education, they join us. Many of them are still with us. And here some more activities that we have done on the social side. I'm not going to read all of this out. In terms of governance, so we won Best Investor Relations Award for companies with a market cap of between about 10 and 30 billion. at the SCT Awards 2023. We were adjudged the company with excellent corporate governance for 16 consecutive years from 2010 to 2025. The S&P has this ranking, ESG ranking, they call it Corporate Sustainability Assessment. And we were ranked in the top 12% of global listed transportation companies. Similarly, Morningstar has a ESG ranking of global listed shipping companies, and we were actually in the top 8%. And we continue to be certified under the Thailand's Collective Action Against Corruption program. Okay, with that, I think we open for questions.
So we take the questions that have already been put up on the thing, on the screen. So if you look at the question, the first question is the procedure of buying younger ships and selling the older ships sustainable in both aspects of decarbonization and cost management? Is there any other innovative method to tackle these aspects? So we are doing our job of renewing the fleet for both the angles. One angle is to decarbonize the fleet or to bring down our grams of CO2 per ton mile of cargo carried. And as we've already shown you, between 2014 and last year, we'd already cut down our grams of CO2 per ton mile of cargo carried from 12.88 down to 6.03. So that itself was already more than a 50% reduction. And under our sustainability linked bonds, we are supposed to bring it down from the base rate of 2019. In the year 2034, we are supposed to bring it down by 38.4%. So the fleet renewal that we have done so far is enough to cover that type of an thing. Even today, if we were to look at the reductions that we have already been able to achieve through this move. In terms of the second question, what will be the significant drivers of the company's profit in both short term and in the longer term? Are these factors controllable by the company? Of course, factors that control our profitability are more or less outside our control, because this is the international global business, and where even a single, how shall I say, a single person like Donald Trump can make a huge impact on our company. So it's something that we really don't control. But what we do control, and which Gautam has explained quite clearly, is the cost factors. So the cost factors are mainly the operational cost of the ships, and then is the finance cost. In both areas, we are trying our best to reduce these costs. When we sell the older ships and replace them with younger ships, our costs automatically will drop. So that's the first cost that will drop. In terms of the finance cost, the interest rate environment is helping us a lot. And the fact that most owners are unable to or do not want to access funds, it leaves the banks with a lot of money on their balance sheets which they want to use. And therefore, we are able to get rates which are much better than in the past. The next question is, with an ease in US-China trade tension, what will be the picture of dry bulk business over the next 12 months? It's certainly going to get better. And we can see that already in the first half of this year. If you look at the numbers that we have shown you, China's steel production has come down. And yet, if you look at the overall production of steel in the world, despite the fact that China has cut down their steel production by about 3% this year, and despite the fact that China is a little bit more than 50% of the world steel production, the rest of the world is growing at a faster speed than you would imagine, at almost 4%. So as to bring the total up by overall of a 1% increase in steel production in the world. So that again tells you that dry bulk shipping should do very well. And the next question is, it seems a lot of PSL ships undergo dry docking. Oh, yeah. Okay, so this question is that you're asking, I think we've explained it in the slide. You had asked that how many ships were done this year. 23 ships were done in total this year. And if you look at the, dry docking position for next year, it's very clear. It's less than half of what we have done this year. So all this special survey comes once every 5 years in the life of a ship. So it means that if you look at our fleet, the majority of our ships were built 5 years ago or in multiples of 5 years ago in the past. Now, when we get rid of the older ships and we get the younger ships into our fleet, as we have been doing, and once the new buildings from Sanfu start to come into our balance sheet next year, then you will see that our time spent in dry dock will drop quite significantly. And we expect markets to be stronger going forward because supply is quite constrained, point one. And point two, supply is going to get further constrained. Why will it be further constrained? Because ships are getting older in the world fleet, point one. Two, they will require to do more special surveys and they will lose more time in that. And point three, they will be forced to cut down speed under the EEXI or the existing ship carbon emission index. So there, if you see, they are not able to manage that, and therefore the only solution for them is to put what is known as an EPL or an engine power limit. Now the engine power limit gives us this 1.5 knot reduction, and because of that we find that 3.5% of the world fleet in our sector is not going to be available this year, next year, and the year after. So because the last question, the time charter income in Q3 grew, but the voyage charter income did not. So normally what happens is that if the market is getting stronger, you will do more and more and more of time charter business. When the market is getting weaker and weaker, you will find that you do less and less of time charter business. Now, so this again is an indicator that we are heading into a stronger market and coming out of a weaker one.
กรรมการผู้จัดการก็ได้ตอบคำถามทั้งหมดที่เข้ามาแล้วนะคะและเวลาก็ได้หมดลงแล้วด้วยยังไงขอบคุณทุกท่านมากที่ร่วมเข้ามาแล้วก็พบกันไตรมาสหน้าค่ะสวัสดีค่ะ
สวัสดีครับ